Hello, I'm Cesar Borja, a Portuguese analyst and co-founder of StocksOnVideo.com. So you have to excuse my poor English as I make this video analysis. Okay, let's start. We're here to study Sterlite. Ticker symbol is STL. And the IPO was just 3 days ago. At 13.44 the stock entered the market at, let me check here, at 14.10, and it is trading now at roughly 14.80. Well, I've read the prospectus of this company. This is an Indian copper mining company, also with operations in zinc and aluminium. And I find it very attractive. This is a 10 billion plus market cap already, so a very big company. I believe it is the biggest IPO ever of a foreign company in the New York Stock Exchange. But I've derived my valuation model, and the results are very appealing, as we'll see next. Let me try to explain my model very quickly. We have these yellow lines which are known facts. These white lines are my estimates based on historical trends and what I see for the future, and these dark yellow lines are just calculus made by this Excel spreadsheet. Okay, so we have initial share price at $14.76 and the share count of 688 million ADS, not ADSs but equity shares, just 130 million ADSs, but total market cap is given by this number. Share count of roughly 689 million shares. Dilution factor, well, to a new IPO I always consider 3% a year going forward, but this company has a very strong balance sheet and very profitable company, so it shouldn't dilute shareholders' value. But I have here 3%, which gives me a final share count for late 2009, early 2010 of 753 million shares. Initial revenue, well, this is the revenue the company had in fiscal 2007, which ended in March 2007. It was $5.6 billion. $5.6 billion. Market cap is roughly 10 billion now. And revenue CAGR, well, revenues have been growing extremely fast here, 90% a year on average for the past 2 years, so incredible growth. And I estimate 75% revenue CAGR going forward, based on the historical average. Well, it can be less, of course, but it can also be more, and well, I figure 75 seems reasonable because of the way the company has been growing extremely fast. And this gives me final revenue for 2009, fiscal 2009, of $30 billion. $30 billion. Initial net profit margin, it was in fiscal 2007 of 19.67 times earnings, very fat net profit margin too, and I estimate this may decline a bit to 18, but it depends a lot on commodity prices, and I'm still a bull on commodities. I believe that I've been a bull for many years now, and many years, well, not so many, since late 2002. Anyway, 18% net profit margin, which gives me final net income of 5.4 billion and earnings per share estimate of $7.18 for fiscal 2009. If we apply the industry average earnings multiple, which is just 12.44, the copper industry trades at a very low valuation. I'm not sure why, but there has been great investments there in that industry. Just a second, let me try to put here. Okay, for example, PCU. This stock has just doubled. It was trading at 8 times earnings, and I had weak hands back then and didn't get much of this incredible rise. But as you can see, this is the copper industry, and its average PE is 12.44, which seems very low because the industry is growing extremely fast. But on the earnings per share multiple estimate, I usually put the industry average, and it is this. Even with this very low multiple, I get a final estimated share price of $89.31, a share price compound annual growth rate expected for the next 3 years of 82%, and an optimal selling price of $57.21. This is the price where the stock would start returning less than 16% a year. So the stock is at 1480 or so very, very undervalued. In my view, if growth continues, it all depends a lot on this number, revenue CAGR. But growth has been 90% a year. What can I do? Expect 10%? I don't think that's reasonable. And with the Indian economy growing 9.2% a year, the Chinese economy growing 10% a year, and this company internally growing 90% a year, well, I don't see as impossible this growing 75% a year, and it would put the market cap at roughly 65 billion, I believe. I made that calculus. Let me check here. Where is it? Okay, it's 62 billion. Well, that doesn't seem like a whole lot for a dominant Indian company in the copper, zinc, aluminium mining industry. So perhaps I'm being a bit optimistic here, but even if it is just 50%, still very, very, very attractive. So on a 1 to 10 scale, I give it a 9. Thank you. Bye.